So Jeremy Wilson, the vice chairman of Barclays Corporation Banking, says Bitcoin and blockchain could be the new operating system for the planet. An operating system for the planet. Okay, not an operating system like Windows 3.1 or XP, which was, in my opinion, the greatest of all Windows versions, XP. But it could be the operating system of a planet. Imagine a planet that you talk about ISO standards. Everybody on the planet agreeing to the same protocol, whether it be accounting, finance, charitable organizations, supply chain management, everything being under the same operating system. You think of the legions of efficiency that we've been able to achieve when, rather than having Lotus 1, 2, 3 and other type of programs that didn't really integrate well with each other back in the 80s, when Microsoft came out with their platform that had Word and Excel and PowerPoint and SQL Server, you mean I could link a value in my Excel spreadsheet that goes in my Word document? How cool is that? And I can send it using an email from the same platform. I mean, it was like back in the 80s and early 90s. You guys remember that? Oh, you guys are too young for that. You don't remember the 90s. That's what it is. So here's an example of why Bitcoin's like monopoly. And I just came up with this one the other night. I haven't fleshed it all out, but this is my opinion. So the inventor of monopoly, Charles Darrow. The inventor of Bitcoin was Satoshi Nakamoto, an anonymous or pseudo-anonymous person. We don't really know who it is, nor do we care. In Monopoly, there's $15,140 that the bank is given to distribute. In Bitcoin, there's 21 million tokens are there to distribute. So it's a fixed currency, a fixed number of money in Bitcoin and in Monopoly. The bank is the trusted intermediary. In Bitcoin, the network, the computer, math, is the trusted intermediary. Like 2 plus 2 is 4, C squared equals A squared plus B squared. We trust that. We don't care who invented the mathematical formula. We don't know who created the Pythagorean theorem. We don't know who did Euclidean geometry or whatever, right? We just trusted it was a guy named, you know what I'm talking about. You know what I'm saying? It doesn't matter who invented it. The math still works regardless of who its author is. The bank releases tokens. So there's 15,140 tokens that the bank holds. Every time I pass go, I get $200. Every time I pass go, the bank releases currency into the system. With Bitcoin, every time the miners validate a transaction and they win the transaction, they're the first ones to validate it, the Bitcoin network pays them 12.5 Bitcoins. There's a fixed supply of the 21 million, just like there's a fixed supply in the game of Monopoly. So here the bank releases the money to the person who passes go. The miners receive the money from the network. Now, if I'm lucky enough to roll a really good dice in Monopoly, I can make it around 2 to 1 to my competitors. The more times I pass go, the more times I'm rewarded with $200. The more times the miners solve a mathematical problem first, an intensely complex mathematical formula, they receive the tokens. It's really not that different.
Where do the tokens come from that the miners are getting?
Again, the Bitcoin it's not a physical token. It's ownership on a global ledger. So it's the ledger that just changes the transaction and makes a modification to the ledger that says now that you, rather than having 12.5, you now have 25 Bitcoins. You now have.
I get the 12, just so I understand, I get the 12.5 and the other 20,900,000, they get reduced by that fraction.
Yes, it gets decremented. Right. That's a good way of saying it. So consensus by the players. So if I'm playing a board game with 3 or 4 people, and I'm sitting across my fiance, and she's got 2 yellow. She's got Atlantic and Marvin Gardens or whatever, and she's got 2 yellow, and I've got 1 yellow, and we're trying to work out a deal, and maybe I want to favor some real estate transaction, but a friend of my competitor next to me wants, the Atlantic or whatever. If we do something inappropriate in the board game, all hell breaks loose. Oh no, you can't trade Atlantic for Baltic Avenue. This one's $350. This one's $25. You can't cheat in Monopoly because everybody will come at you with a dagger. So you have this consensus going on. by the players of the game. They provide the offense. They're playing an accurate game based on the rules. And there are some people that I know who are voracious. They are retentive. They will not budge on a monopoly rule to save your life. You want to put a little extra money in the kitty in case you fall on free parking? Oh, no, no, no. That's not in the rules. We play Monopoly, we play according to the rules. Bitcoin is an incredibly intense, rules-based system. The Monopoly is a rules-based game. Bitcoin is a rules-based value transfer. All these miners are validating all these transactions based on a certain set of protocol and rules. If there's one little thing that's wrong, the transaction gets kicked out. That particular transaction doesn't get validated. And it keeps on going and going and going until you find authenticity, until there's consensus. And then Monopoly has also inspired one-off games. You can get SpongeBob SquarePants Monopoly. You can get the Internet.com Monopoly. You can get Phineas and Ferb Monopoly. You can get Chicago Cubs Monopoly, Franklin Mint Monopoly. The rules of the game are the same. It's just that the pieces of property, the value, look a little bit different. For the most part, the game is the exact same rules. Same thing is going on with Bitcoin and blockchain technology. Bitcoin has inspired Ethereum, XRP, which is Ripple, the Ripple network that banks are going to use, ZEC, Zcash, an anonymous, a completely anonymous transaction of value from one person to the next. Ethereum, the Ethereum Alliance, Enterprise Alliance, it's joined by JP Morgan, Intel, Microsoft, and dozens of other companies. So when Jamie Dimon gets on CNBC and he says, any one of my employees buys Bitcoin and you're fired? Okay, as a trader, when someone asks you, are you long or are you short? You always say the opposite of what you're doing. Nobody in their right mind plays their hand, right? So if Jamie Dimon, JP Morgan, is a member of the Ethereum Enterprise Alliance and he tries to talk this down, please take it with a grain of salt, because the biggest, brightest minds are going toward Ethereum and these smart contracts that will be writing and executing on the network. The promise of blockchain is a world without middlemen. As a middleman, that's why I'm here before you. This is what brought me to speak here at FEI, because I've been a floor trader my life, my whole life, and I saw that world dissolve before me as computer and algorithmic trading took the spread width and the profitability out of trading. The 2008-2009 Great Crisis jacked up margin prices and the cost of regulation. We had Sarbanes-Oxley. We had 501c3, all these regulatory reg show market making rules that basically has decimated the entire trading floor. So here's a great joke. On one hand, eliminating the middleman would result in lower costs, increased sales, and greater customer satisfaction. On the other hand, we're the middleman. Our lives, the lives of our young people who are getting into this industry, who are getting into CPA and CFO positions, people who are up and coming, they need to be a CFO programmer. They need to be a chief technology officer and a programmer. You need to be a CEO and a programmer, because there's going to be a time where your QuickBooks account, your expense reporting that happens on a monthly basis, right? You work for a big company, it's time to turn in your expense reports, maybe it's like 30 days, 45 days, and you're going through it line by line, and you're like, hey, what's this? You bought a baby grand piano on a company credit card? Why should it take 45 days to be able to audit that? Auditing will happen in real time, 24/7, 365. So I'm sorry that this font is a little bit smaller, but I had to jam it in there. So I'm just going to run through some attributes of blockchain. The integrity of the network is encoded in every step of the process. So every step of the process in blockchain is a math-based code whose rules are immutable. Now, if you want to change the rules and create a new blockchain, go ahead. You don't need anybody's permission. But while you're working in the system, you can't take something off of QuickBooks and put it in the adjustment account without someone's permission. It solves the double spend problem of me taking $1 and giving it to Bill over here. I no longer have it, he does. Just like the merchant banks, Visa, MasterCard, they make sure that when I buy a Starbucks or I pick up a gift at Macy's, the money comes out of my account, it goes to the person or the merchant that sold it to me, and I'm not allowed to sell that. I'm not allowed to use that money anymore, right? If I buy a gift card, it takes it off the gift card and gives it to somebody else. So it decrements off my balance. The distributing computer power is spread so thinly across a global network, there's no central point of attack. Network security provides, again, no single point of failure. You remember that distributed chart of that worked out like a web. One particular computer, 10,000 computers go down, it doesn't matter. The system is not compromised. So each user gets 2 cryptographic keys, one private, one public. It means I can take my public key and let anybody have it. I can make stickers and put them on light poles. I can take out a billboard on 294 North with a picture of my public key for Bitcoin. And nobody can take and alter the global record of accounting. But once I use my private key in conjunction with the public key, then that's what allows my permission to alter that record of the Bitcoin ownership. Each person gets 2 keys. The ultimate privacy protection because identity is not needed. I can make an anonymous donation. I can send Bitcoin to anyone in the world almost instantaneously, and they don't really need to know who I am. Well, if you want your identity to be known, that's your business. But it's not like you have to put in your phone number every time you go to Walgreens to buy a pack of gum, right? I mean, if anything, we see that our identity is used too much in almost worthless transactions. Why do we have to give up all this information, our social security number? You know, when you talk to Comcast, what do they need that for? We should be able to have a method of payment that allows for us to exchange value, send money, without completely identifying and revealing everything about us. It provides a real-time audit trail that can help you reconcile the transactions. Again, to be in a blockchain network is to abide and obey the rules of the network. Multi-signature features available to exercise control or the release of funds. So what does that mean? It means that people in your company, if you have an international company, you just can't send Bitcoin to anybody you want. You can't transfer money out of your checking account to anybody you want. You need 2 signatures, 3 signatures, 5 signatures. You need multi-people agreeing to release the funds and alter the Bitcoin in the blockchain ledger. If you're a non-for-profit, a 501c3, which is kind of where my heart is, can you imagine that you have restricted funds that you are required to use a certain way? You have unrestricted funds, which means you can use it for anything you want. The unsexy things like plumbing and a roof, where everybody wants to donate for the fun stuff, right? So you can have a real-time ledger on the internet that anybody can view, and these are the restricted funds. You can instantaneously see your contribution to United Way or Cancer Research, Susan B. Komen organization. If they wanted to display that, you'd be able to see in real time the restricted funds, non-restricted funds, and it's up to the executive director, along maybe perhaps in conjunction with one of the board members to release and do things with the money. But you have a perfect audit trail of the money, your donation, at every step of the way. The immutable database gives control back to the owner of the data. And again, the data is spread so thin that there's no central point of attack. So blockchain is this trusted attestation between unknown parties. So if I'm sending money from one place to the another, I don't necessarily need to know the identity of the other person. They don't need to know me. The transaction is trusted, right? So if I'm someone here's going to be a bad example. But say, for example, I am a guy that put a piece of software on your computer that is now cryptographic ransom. I have control of your computer. You pay me Bitcoin, or I'm not going to release it, or maybe I'll release your information to the globe, right? It's corporate espionage using Bitcoin. So if I use my American Express card to pay the ransom, the second I get my data back, I'm on the phone with American Express trying to reverse that transaction, right? If I'm using the Visa network, or I'm paying with another form of a wire transfer, I'm going to try to figure out how to stop that transaction. Or at least if I use a wire transfer, I'll know who the identity was of the person on the other side. Bitcoin doesn't necessarily guarantee the integrity of the people buying and sending it. It validates, it's the security of the transaction is always trusted. Remittances can take 2 to 7 days to settle. Blockchain can settle in a fraction of a second. Stock, option, bond, and futures exchanges are going to trade 24/7, 365 with a perfect audit trail. You guys know about T plus 3, trade plus 3 days to settle stock transactions, T plus 1 for option transactions. Pretty soon it's going to happen in under 10 minutes.
The
Yes, sir, you had a question?
perfect audit trail, the audit trail for who?
Whoever wants it. So right now you have the stock feed coming from the New York Stock Exchange. And as an option market maker and trader, we're a derivative, right? We're a second off. So all our theoretical values that we're computing are based off of a single feed from the New York Stock Exchange. And then whenever I make a transaction, whenever I submit a quote to the CBOE, that's recorded. Whenever I buy or sell and make a transaction, the computer checks to make sure that if I'm selling stock, do I really own it? Is it a short sale? Is it a long sale? Is it buy to open, sell to close? You have the regulators who are upstairs making sure that I've got enough money in my account to even make these transactions. Make sure that when I'm quoting 1,000 shares in Google, I actually have the money to cover that. So you have multiple parties. You have the New York Stock Exchange. You have Fidelity, E-Trade, Ameritrade. You've got FINRA, SEC. You've got the exchanges, the Oprah option codes. You have all these people looking at the same data, but they're not looking at it at the same time or in the same way that they need. Here what we can do is we consolidate all the activity in one big massive blockchain, and people just plug in to...
You couldn't do anything about it if the transaction went through.
Well, right. Okay, so right now if I'm at the CBOE and I do something wrong, it takes 3 days to get a letter from the SEC because we're a regulated body. So then they say, hey, you know that transaction you made 4 days ago? We think there was something fishy about that. So come on up to Business Conduct Committee. We're going to explore it. We're going to call the SEC. We're going to call the New York Stock Exchange. We're going to call the clearing firm. We're going to call Goldman. We're going to assemble all these disparate places to get a database together to see what was the timeline of the transaction. We're going to go on Bloomberg. We're going to download the file. So you have to go to 20 different places to get the data that you need to defend yourself or which convicts you for wrongdoing. You don't need to do that, go to all these different places and request. It's all in one place.
So conviction here, there's nothing you can do once the transaction went through.
That's not true. We had to bust trades all the time. We had to make good on transactions.
On blockchain?
No, at the exchange, at the CBOE.
I'm talking about the perfect audit trail of the Bitcoin. Even if you have this audit trail, I agree with you. It's perfect.
Okay, I see what you're saying. Well, we're talking about blockchain now. I'm not necessarily saying that Bitcoin, you can do anything about it. You're right. But in terms of a regulator having a real-time audit trail, every single CB, we kind of switched to blockchain. Yes, right. So I'm offering a possible use case. So the Chicago Mercantile is really embedded in this space. They're funding startup companies. They're really getting involved with this because why do we need to close at 3:15 or 3:30 for the closing date? We started at 8:15, 8:30. We closed at 3:15. Why? Because things need to settle, right? We have all these trades from the day. We match them up, Option Clearing Corp, DTCC. We settle and clear the ones, that settle quickly. There's some out trades. There's some reconciliation we need to do. We're all good. We settle the money. We have short-term funds going from Goldman to the Federal Reserve and from JP Morgan, and all the other trading firms are settling up money. They have overnight funds, and we begin again the next day at 8:30. Why does that time frame need to be done? It can be done now on a blockchain instantaneously, in real time. Because the instant you make the transaction is the settlement of the transaction. It's the payment of flows. When I sell shares in my 401k or in my E-Trade account, it still takes 3 days for me to get the money. Why is that? The trade just already happened like 10 seconds ago. Why do I have to wait so long to get my money? It's because we have this efficiency and friction in the system. Soon, I'll be able to sell my shares in my E-Trade account. It will convert to Bitcoin. It automatically settles, trades, the whole thing, and I'll have it in my wallet in like 10 minutes. Imagine a world like that. Swift payments take days to clear. The blockchain using the new Ripple network takes about 8 seconds. So you can go online on Google, and you can do you go to the Ripple network, and they have a real-time use case. The Bank of Canada sending a couple of $100s to a bank in Germany. Normally it takes between 2 to 6 days, and it's very expensive to send that transaction. They did it in roughly 8 seconds. So when I go to the Bank of America, BMO Harris, or Huntington Bank, and I want to do a wire transfer, they charge me about $35 or $40 to do a wire transfer. The cost to the bank is about $8. So it's still a profit center for them. Imagine when the entire banking system is using Ripple, this currency, this network blockchain, where they can do the same transactions. It doesn't take 2 to 6 days. It gets done in 8 seconds, and it costs them about $1. Now, will they pass the savings along to their customers? Probably not at first, but they may. Again, real-time risk management, trade execution reduces the counterparty risk. Proxy voting in Estonia, you can vote for your political candidate now on your smartphone. one person, one vote. This is not going to go over good in Chicago, where it's vote often, right? And even like the people in the cemetery are voting. It's crazy, right? And I don't know. I mean, yeah, yes, you want kind of the face-to-face person aspect. I get that. But going to my local voting booth this last year, I mean, people dropping stuff, the machine doesn't work, they have to back it out, redo it. And I always wonder, like they got a big stack of people who haven't voted yet. I always wondered, like when the lights go out and the doors are closed, are they doing something with those? You know, I don't know. Pension and stock lending will know the location and owner of assets. Whoever here has a trading account, pensions, do you really think you own those shares in your 401k? Do you really think that your pension has those assets? No, they're hypothecated. They're lent out to Goldman, who sends them to JP Morgan, who sends them overseas to an insurance company, and they're getting stock clearing on all that. When you're looking at your statement, those assets really aren't there. They're someplace else. They have a record of them, maybe, but when the 2008-2009 crisis hit and Detroit filed for bankruptcy, finding the provenance of shares and assets was almost an impossible task. Blockchain will have an immutable permanent record of who gives what to who, and you can just follow that back all the way to the beginning. That's an amazing, amazing feature to have. And again, the execution of smart contracts are going to replace the needs for escrow companies. Yes, sir?
So how is that scalable on blockchain? I mean, if I'm understanding correctly, there's a redundancy within the system, so everyone is tracking the same transactions, and they have to agree across the whole blockchain newsroom, so to speak. So you split everything blockchain, every transaction from here on out, and it's more than one piece. How's that scalable?
How's it scalable? It's massively scalable because you can, for the number of players that are actually remember, blockchain is two things. It's public blockchain, like Bitcoin, where everybody anonymously, anybody can tap in. Then there's the private blockchain that banks are going to use. It'll be a consortium of inward-facing banks. It will be Maersk, the great shipping company, using it for supply chain. So if anybody here knows about supply chain management, you could probably shed more light on what does it take to keep track of a widget that's been ordered in China, manufactured, delivered to the port, shipped, stacked, put on the boat, across the sea, comes in San Francisco, makes it on a train, stops in Chicago for 2 days, and then goes to New York. With blockchain technology, everybody who has an economic interest will be able to follow along, whether it's 1, 2, or 1 million people. So blockchain is incredibly scalable, but it depends on whether it's a public blockchain or a private blockchain. And so it's very, very easy to be able to scale this just because it's open source, it's basically free, and you get to create it any way you want. Did that answer your question about scalability?
Yes, I mean, but there's a permanent record of the transaction, and I recognize it's an electronic story, so it's not like paper getting filled up, but isn't every transaction for evermore going to be set and stored?
You say it like it's a bad thing. I know that.
I'm not saying it's bad. I'm just wondering the capacity that at some point everything everywhere goes to blockchain. And you gave an example of
Sure.
China.
Yes.
So the company ordering it, the suppliers, the manufacturers,
Sure.
they're all tracking that same record in multiple pieces. It just seems like, right now there's like one record. The guy who's putting it together, he has the orders, and now the whole world's going to have multiple.
But it's up to that person, right? Well, when I bought my first computer in 1988, it cost about $2,500, and the hard drive was 80 megabytes. And the salesman said, "Hey, this is the big hard. This is all you're ever going to need, right? You're never going to need a computer. You'll never fill up the hard drive." And that took like a month, right? And now I bought a 6 terabyte hard drive at Costco for $103. So scalability is not an issue. We'll take care of that as this expands. Right now, don't fault blockchain because it doesn't do everything you want today. This is still nascent, new technology. It will evolve. The first time I downloaded and was looking at the internet in the mid-1990s to trade stocks and get financial information, I would hit like www.yahoofinance.com. I'd hit enter, and I would go make a cup of coffee, use the bathroom, come back. It was like zip, zip, zip. And if I would have been at a presentation like this and someone said, "Yeah, someday you're going to be able to download and watch streaming of Netflix movie on a cell phone," I'd be like, "Are you out of your mind? I can't even load Yahoo to send an email. Don't tell me that. It's impossible. But again, things change, things adapt, and we will correct along the way. And the blockchains will come and go. They may take a blockchain and kind of set it off to the side, or maybe we'll get to the point where they're able to compress the data so much it can fit on a small USB stick. Yes, sir?
So you say you can use blockchain technology without Bitcoin?
Yes. Bitcoin is the first successful application on the blockchain. And yes, right now maybe the only thing you can do is like a kiddies game. The YouTube is notorious for cat videos, and someone created an Ethereum smart contract based on cats, and it was all laughter, it was all fun. But we're just beginning to do this. A gentleman that I know, John Merkovic from the Recorder of Deeds office, there's a tremendous amount of redundancy when you close on a piece of property. Most of the time, it's just revalidating the same information that we've known for 100 years. The piece of property is the same. Your reputation as a mortgage buyer or owner is the same. Your address, your social, I mean, everything is pretty much the same. But you still need a lawyer, maybe 2 lawyers to do a closing. You have to assemble all these documents. There's no reason why it should be that way. And actually, most of this stuff is still paper-based. Soon it will be electronic and a smart contract where I send Bitcoin and an escrow company receives the Bitcoin, and then they will release the title that's been held on a blockchain in my name. I have this immutable record of my land title.
Who owns the blockchain? Who do you buy the blockchain?
You don't buy the blockchain. It's up to the company to create their own blockchain. The blockchain's open, free. For the most part, anybody can create their own blockchain for your company, for BMO Harris, Chase. Name any company in the Russell 2000 that can have their own blockchain to suit their own needs. So the beauty of blockchain is programmable money. It's programmable transfer of value, whether it's a title of a piece of property, whether it's a supply chain management along the way, or keeping track of a VAT tax along the way. Imagine how blockchain could help that. Yes, sir?
You may be talking about this just in just a second, but did blockchain just find a way for organic food like they found all the way back to where there's a food supply where they found a certain piece of material?
Yes.
What it was in Mexico or something like that, where it caused a whole chain of pesticides.
Theoretically, you'll be able to know and I'm not saying this is not overboard, but someday you'll be able to know the exact time and date and geographic locations of when the oranges that you are eating for breakfast were picked, or whether the farm really used a dangerous nitrogen in their fertilizer rather than being organic. I'm not saying that Bitcoin is the holy grail here. I'm just saying it has tremendous applications in a world that transmits data and communications much faster than it does money and value and information. Yes, sir. Jerry.
I've seen a commercial, and I'm not sure I'm going to get it straight, but I think it's Verizon says, and they show the food chain when the fisher people
Right.
bring the fish in, and it's got to be at a certain temperature, and then they put a little
Little
like a
sensor that's on there.
That little sensor. Is that based on blockchain?
Well, you could have a Wi-Fi enabled sensor that connects to the blockchain, and you'll be able to watch in real time the guys that are getting your fish or your lobster from the time using GPS coordinates of when it lands, when it gets off the table, to the container, when it's dressed, etc. But again, that's not perfect. I mean, if I was a minimum wage laborer working at a fish processing plant, and I realized that, hey, I left this bin out here for 4 or 5 hours, maybe I'll throw a few more bags of ice on it to make it look like I didn't do anything wrong. But so it's not perfect, but yes. And I have to laugh at that commercial because it makes it look like Verizon invented this, where really we all know that the big get bigger, and the companies will be able to harness this kind of technology. So let's get on to crypto. Can someone give me what time it is? How are we doing on time?
4:56.
4:56?
Yes.
Oh my gosh. Okay, I have to rip through this. Again, public key cryptography. I need 2 more hours, Dave. I'm sorry. All right, so public key cryptography was invented in the 1970s. It's very, very hard to attack. It takes a brute force attack in order to unwind Bitcoin, but even then you could only alter your own transaction. I already talked about public key cryptography. Mary had a little lamb. This is what it would look like using the SHA-256 algorithm of Bitcoin. The string of numbers is an encrypted term, an encrypted outcome. If Mary had a little lamb was a small l, the address is completely different. Mary had a little lamb with a period. The address is completely different. So for minuscule changes of an input, it makes massive changes on the output. That's what makes cryptography so interesting. I can take the entire King James Version of the Holy Bible, or the U.S. tax code, or the Affordable Health Care Act, cut and paste it into SHA-256, and the outcome is virtually the same, but 64 characters roughly. $35,000 of money stolen every second. Capital One uses the Spark payments. Bitcoin makes it more simple. I already gave you the example of when I was paid from the London Stock Exchange. The horrendous amount of friction, and everybody took a piece of their cut. I think the total fees, that the banks took were, $150. Now the London Stock Exchange could have sent me my fee before I even left the lobby. I suggest for you guys that are in finance and the international companies and banks, go to the Ripple Bank Network, which shows a wonderful transaction between the Bank of Canada and Bank of Germany, how a transaction happens in 8 seconds rather than 6 days. It's faster to mail an anvil to China than it is to send money through the banking system. So true. Money is already digital. It's not like they're shipping pallets of cash to you when you do a wire. So true. And with Bitcoin and blockchain and digital currencies, the size of the transaction doesn't matter. 1 million, a billionth of a dollar, you'll be able to send micropayments to anyone in the world. There's going to be thousands of Bitcoin and blockchain applications in order to bring this value to the industry. And again, cryptocurrency doesn't trade it open at 8:15 and close at 3:15. It's open 24 hours a day, 7 days a week. Supply chain solutions are going to get 3 or 4 hours of audit trail from product to end, from 3 hours down to 25 minutes. Banking the unbanked will be able to help people in Kenya, Uganda, anywhere in the world, Afghanistan. I can send money and donations to anyone in the world, and I don't have to worry about an intermediary interfering. Cryptocurrency is a digital asset. Bitcoin is a remarkable cryptographic achievement, something that is not duplicable in the digital world, has enormous value. MP3 files, MP4 files, videos, any kind of digital content has always been duplicated to the detriment of the owner of that content. Now for the first time you can own that and regulate it, and you take ownership back at it. On April 17th, cryptocurrency market cap was 29 billion. In May it was 54 billion. On November 17th it was over 200 billion. This is Bitcoin. Cryptocurrency market cap almost $880 billion. It trades $38 billion a day without a bank, without a credit union, without anybody's permission, without an intermediary, person to person. $38 billion. Believe me, Jamie Dimon wants a piece of that. In 2017, Bitcoin was $1,700 a token. It was $13,632 on the 15th. Again, Bitcoin provides this digital scarcity. It has a growing user base. More and more people are accepting Bitcoin as a way of payment. Again, I'm not saying that Bitcoin is the end-all, be-all, but other cryptocurrencies will, where the cost of transaction fees are very, very small. Global acceptance of Bitcoin is picking up, with over 11,566 people, vendors, taking Bitcoin. We need, again, disruption. As I said before, Nicaragua, only 19% of the people have a formal bank account, but 93% have cell phones. It took a Western Union 150 years to build 500,000 points of contact. M-Shwari, which is an electronic version of like a text messaging, sends money. They did that in 21 days. 75% of the Kenyan economy currently operates on a cell phone you and I would have thrown away about 20 years ago. They can text message in their own currencies to anyone they want almost instantaneously. And this is where you guys are going to affect. A decentralized continuous audit reporting protocol. There's now a company that are trying to create an autonomous a blockchain company that from its inception, every transaction, every expense, every audit, everything goes through with GAAP accounting rules. And you'll be able to watch the cash flow statement, every part of the company, in real time, instantaneously. You're not going to need to do quarterly reports. You're not going to need to do yearly or annual certifications. It will happen in real time. Yes, Walmart does need greeters. All right? So here are 6 ways to profit from blockchain and digital currency, because everybody asks me, how do I make money with this? All right, again, not investment advice, just my opinion. Day trading cryptocurrencies. You can open up an account at Poloniex, Kraken, Binance, or Bittrex. These are cryptocurrencies that are dedicated to, and all they do is cryptocurrency. It looks like an E-Trade or a Fidelity account, but even more vibrant and robust. 2, you can become a cryptocurrency miner. You can go on eBay, Craigslist, go to Bitmain company on the internet, and you can place an order. They only accept Bitcoin, but you can place an order to buy these machines. And with a little bit of help, you can get it going and become your own miner and receive the rewards. Be part of a pool. Be part of the system that works, that works great. Investing in a mining farm. In addition to being the owner of Cenacle Capital Management, I also have another company called Mining Rig Solutions. Our goal is to provide solutions for people, high net worth individuals, hedge funds, family offices who don't want to invest in cryptocurrency per se, because we know that the 80-20 rule applies. 80% of these things that you hear about on the news will go out worthless, and maybe only 10 or 20% will remain viable. So we're looking for we're taking a more commercial approach. We're token agnostic. We don't care about the cryptocurrency per se. All we're looking at is the return of investment on the product. Number 4, I said invest in a cryptocurrency hedge fund, but I had to scratch that out because the word invest is not the right word. You're speculating. Expect to lose 100% of whatever you might put into it. But there are over 100 hedge funds right now to date that were published, I believe, in Barron's that are buying and investing, speculating in cryptocurrencies. Polychain Capital was started by about a 25 or 26-year-old guy. He tried to raise 30 million, was struggling. Now he's got like 350 million of assets under management. Not bad for a 2 and 20 deal. Again, hundreds of cryptocurrency hedge funds are starting. An initial coin offering. An initial coin offering is kind of like an IPO, except it's not with shares of stock. You're basically making a contribution to the development team to build a cryptocurrency. Because once the cryptocurrency gains adoption, once it has viability and a utility value of transferring money from one place to the next, or healthcare records, or land trust titles, theoretically the belief is that that token will go up in value. You don't technically own equity. You are contributing to a development project. Number 6, my company, Cenacle Capital Management. This is where my gray hair comes in handy. So at first, I was thinking about starting a hedge fund with cryptocurrency, but I figured that really wasn't a game I wanted to play. I felt that companies like Accenture, CME Group, Intel, JP Morgan, Microsoft, NVIDIA, Cisco, Santander, State Street, Western Digital, companies with an average market cap of $107 billion. The big keep on getting bigger. My experience at the Chicago Board Options Exchange taught me that. We were rebels. It was the wild, wild west. We were traders. We were getting up, drinking coffee, trading, having lunch, go to the health club, steam, sauna, whirlpool. We used to call that the Jewish triathlon. Right? So we'd go, lunchtime we'd take a break, come back and trade like crazy and make your money and repeat again the next day. So I don't really think that right now blockchain or cryptocurrencies is an investment. You only invest in cryptocurrencies if you are comfortable losing 100% of your investment. But I think that the efficiencies to be gained, the revenues, like IBM is an amazing company that just keeps on pivoting their business model from laptops and computers to data centers to analyzing big data. If anybody's going to be able to figure out blockchain, it's a database guru like IBM. I'm very, very bullish on IBM. And again, our enterprise strategy is it's large cap companies. It's mostly large value and large growth. It's got a little bit of a technology bent to it. But there's companies in media, finance, software, computers, energy, banking, semiconductors. Every aspect, every one of the 40 broad S&P sectors, there will be a company inside that sector taking advantage of the efficiencies in blockchain. Again, these are some of the companies that are in the strategy. And we're coming up to the end, and this is how you can help me. I thank David for the invitation to present here, but I would like to present in more venues. Yes, sir.
Just a question. Blockchain, cryptography, quantum proof? If so, how long?
Well, that's a great question. I think that I don't know the answer. I would say that IBM Watson is at a remarkable computer data center, but I think there's only 6 of them at great, great expense. And I think it's very expensive to use the IBM Watson platform. But blockchain, whether it's a private blockchain, it's internal, only used by the banking system, or it's a public blockchain, like say, for example, you're going through the iPass, and it's not money that comes out of your checking account anymore or your credit card. It gets sent via a micropayment of blockchain or of a digital currency. I have a very strong feeling that for the first 9 years, the people that develop the open source code for Bitcoin and other digital currencies have been able to stay relatively resistant to competition from other types of mining. So Bitcoin uses something called an application-specific integrated circuit. It's computational heavy, but memory small. Other cryptocurrencies like Ethereum, Zcash, Music Coin, and 100 other use something called GPU mining. They are huge files that don't require as intense computing power. So yes, maybe quantum computing will be able to figure things out fast, but it might not be able to solve for a file that's 4 megabytes or 4 gigabytes in size. So the answer is we'll see. Yes, sir.
Is there an exchange rate between, let's say, a cryptocurrency and a Bitcoin that you're the owner of Ripple and you have Bitcoin, you're trying to buy something or sell something? Is there some way to exchange rate there?
You want to exchange rate Bitcoin for Ripple? Well, if you go to any one of these exchanges that I had mentioned over here, what you do is you take your credit card or your debit card, you open up an account at Coinbase or another app, you buy Bitcoin and you send it to the exchange, just like I have to send money from my bank account to my E-Trade account, right? And you'll be able to buy Bitcoin, and when you want, you can sell it and exchange it for Ripple. You can sell it and exchange it for Ethereum or the other 1,300 cryptocurrencies that are currently in existence. Any more questions? Yes, sir?
Does internet have anything, the speed, when you use that ant miner, does speed have anything to do?
You know, not really. It's pretty forgiving.
Okay.
You don't need the absolute fastest internet connection to do this. Yes, David?
Effective, like governmental regulations, like such as like China or South Korea prohibiting cryptocurrency. Do you see that continuing, or do you see it just with right now?
You know, I hate to give all these trading floor isms, but we had another saying on the floor is that we mock that which we do not understand. And I think that the Chinese authorities want to regain their somewhat communistic approach in the economy. There's a massive outflow of currency leaving the country. They want to get their arms around that. When I heard that China was clamping down on Bitcoin mining, I almost popped open a bottle of champagne, because that means there's less competition coming from China, and our American mining pools theoretically should be more viable and more profitable. So you know what? Let them do that. China was the first to dismiss Google and Apple and Netflix. They steal most of our Hollywood content. You know what? Let them deal with the karma they brought on themselves. Any other questions? Yes, sir.
Are there books like Bitcoin,
Yes.
cryptocurrency
Yes.
for idiots?
Okay, all right. Get your piece of paper and pencil out. I'm going to give you 3 or 4 books that are like must-reads. All right. First one, Blockchain Revolution by Don Tapscott. Blockchain Revolution by Dan Tapscott. Second book, The Internet of Money by Andreas Antonopoulos. Internet of Money by Andreas Antonopoulos. Third, The Age of Cryptocurrency by Paul Vigna, V-I-G-N-A, Paul Vigna. Available on Netflix or Amazon Movies, The Rise and Rise of Bitcoin. And lastly, go to YouTube and watch any video by Andreas Antonopoulos. The guy is absolutely amazing. And he gives a great big picture perspective. He's able to take a complex topic and put it into easy to understand terms. And I think you'd be able to get a very good footing from that.
What about that video by Tapscott?
Yes, YouTube. Don Tapscott also has like a 7.5-minute video, maybe it's 11 minutes, about Bitcoin and blockchain, specifically blockchain technology. Wonderful, wonderful TED Talk in a presentation. Bless you. Yes, sir.
Some of the new exchanges that have been created, like Bitstamp, how safe or secure they are? Because like Bitstamp, for example, you got to give all your personal information, social security number, driver's license, banking information. So,
well, there's 2 ways to answer that. If you don't have your private keys, you don't have your Bitcoin. So if you have assets on Bitstamp or Coinbase or Gemini or some of the other companies that hold on to your tokens, whether it be a wallet or an exchange, I see that there's a threat 2 places. One is all your information is centralized at this organization, Bitstamp or Coinbase. So theoretically, all your personal information is susceptible to a hack. Also, your coins are at risk because you don't have possession of them. You need a Ledger Nano S or a cold wallet facility storage way to store those Bitcoins. So you kind of get them off the custodianship of somebody else, and you maintain custody of your own tokens. Yes, sir.
What about U.S. regulation? Thinking SEC, especially on exchanges, where to prevent manipulation and things that go on in unregulated markets.
Well, manipulation of unregulated markets. Manipulation of unregulated markets. I don't know. I guess I'm more worried about manipulation of regulated markets, like LIBOR and some of the other.
You have to be a London banker to that.
You have to be a London banker to do that. Right. I understand.
Regulation anywhere, so in these unregulated
Yes.
environments,
It's coming down the line. Initial coin offerings are being scrutinized by the Securities and Exchange Commission. The IRS is petitioning Coinbase and other companies to make sure that they get your tax records. They're going to start issuing a 1099 soon, so you'll get short-term capital gains and losses. But you know what? It's kind of hard because it's unregulated, right? It's like cash. Is there a transaction? Is there a record when I give Bill here 10 grand for something? Well, not really. And again, that's what Bitcoin is. But again, as time goes on, the SEC will exert its authority, and rightfully so. The US government will exert its authority, rightfully so. The means that they do that, as I was talking to this gentleman back here, do you remember back in 1933, they said, turn in your gold or you're going to jail. All right? What happens when we wake up tomorrow morning and the government says, turn in your Bitcoin or you're going to jail? A lot of people are going to turn in their Bitcoin. But some people won't. Yes, sir?
There's a new Netflix documentary called Banking on Bitcoin that came out.
Banking on Bitcoin. I did see that one. It's a very good documentary. Does anybody here use Twitter? Oh, come on, guys. Step into the early 2000s. All right, you need to get a Twitter account and follow anything that has to do with cryptocurrency. LinkedIn. See, maybe you're talking to the wrong guy. LinkedIn, Twitter, Facebook, cryptocurrency, new cryptocurrencies, Chicago Merc cryptocurrency, blockchain, Bitcoin. So I am so into this, I almost don't know that anything else exists. My wife says, hey, there's a text message was sent to these people in Hawaii that a ballistic missile. Really? When did that happen? She's like, oh, 2 days ago. I'm like, oh, sorry, I was watching Bitcoin fall out of bed. I'm sorry, sir? Well, you know what? I'll bet you that your feed, if it was publicly disseminated, I think everybody has their own thing, whether it's cats, dogs, politics, Trump, whatever. Right? We all have our favorites and our things that we don't like. Yes, David?
Is there any chance that the $21 million Bitcoins could increase? And if so, who has that power?
The 21 million Bitcoins will only increase by supply and demand. Yes, they might be manipulated through the market, through the big players. But you can say the same thing for Overstock.com. That was, I think the last name was Brook. Patrick Burt, I think, was the CEO of Overstock. He was complaining that all these people with the short sale rule were selling his shares down, and they continued to fail to deliver day after day after day, week after week after week. They never made good on the physical shares to the clearing firm. The same reason why some shares of stock have a greater short stock interest in the initial float. How does that happen? But Bitcoin is 21 fixed coins. I'm not saying Bitcoin is going to be here forever. There's a book called Who Moved My Cheese? And the theory is the first mouse doesn't get the cheese. The first mouse gets the trap. It's the second mouse gets the cheese. And right now, Bitcoin is not the perfect cryptocurrency. It's not the perfect value transformation and transmission because it's expensive. And frankly, it takes 10 minutes or more to validate these transactions. It's kind of slow. Ripple takes 8 seconds and it only costs a few pennies. Ethereum is much faster. Do I have time for one more story?
5:15.
5:15? All right, David, it's up to you.
You got to 5:30.
Well. All right, I am rejuvenated.
One more story.
At least one more story. So being Italian, I have to use my hands to speak, otherwise it's like I've got a speech impediment. But here's a story about efficiencies, okay? So I was telling you about 501c3s and charitable organizations, about the world's unbanked. Let me just give you an example of, we might not really see the benefits of blockchain. You're going to log into your bank account. You're going to log into the website. You're going to use an app on your smartphone. And it may use blockchain and other kind of internal databases. And you might not even know. But here's a really great story that I heard the other day. I was being interviewed by a woman named Mary Helen Fiorito. She's works for the Archdiocese of Chicago formerly. And we were talking about Bitcoin to an audience that still has AOL.com email address extensions. Impossible to have this conversation. But we were 50 minutes and struggling on how to describe Bitcoin and digital currency. And then we hit on a common thread. So Mary Helen supports a Catholic bishop in India that runs an orphanage in like Mother Teresa's untouchable of the untouchables, right? So how do they do a fundraiser in Elmhurst and get the money to the guy that runs the orphanage in India to help these children? So they do a fundraiser in Elmhurst. They take the money and they give it to the Archdiocese of Chicago. The Archdiocese of Chicago sends it to the Vatican. The Vatican converts the US dollar into euros, or at the time, Italian lire. And then they hire a diplomatic courier. The Vatican courier comes with the leather satchel and the whole thing. And they stuff this satchel full of cash. They put him on a plane and he flies to India. When he lands in India, he has to take a train a day or two to this remote village. And now the hard part begins. The road to the orphanage is filled with bandits and robbers. He delivers this satchel of cash. Now, mind you, a month has already gone by, maybe 90 days. And he gives it to this Catholic bishop, who then has to take this satchel of cash and take it to his bank. But everybody knows he's got a bag full of cash. The robbers know it. The village people know it. Everybody at the orphanage knows it. And when he's walking toward the bank, the cops know it. Everybody knows that he's got a bag full of money. So his life is at risk in depositing this money for the orphanage. Then he walks into the bank, and it doesn't look like a BMO Harris or Chase Bank. You know, there's no Keurig machine making coffee. There's no mints at the table. It kind of looks like a Quonset hut, or maybe the smallest, dingiest kind of place you can possibly imagine. And he gives this satchel of cash to the teller, and they write him a receipt for the deposit. But there's no guarantee that they actually credit his account for that, because the teller wants the cash. The guy that owns the bank, the president, he wants the cash. Security guard is not letting the bank teller or the president out without getting some cash, because he's got a gun. And he makes it this deposit, but he's not really sure that the funds are going to be available to him. So he goes back to the orphanage, and when he wants to use the money, he doesn't write a check. He's got to go back and travel to the bank, take out a cash deposit, a cash withdrawal, bring it back. When the bishop goes from the bank to the orphanage, they know he's got money. So his life is at risk. The cash is at risk. The orphanage is at risk. The children are at risk. There's no trusted authority. The people that we trust, the banks, we like to make fun of them, but they really do provide a pretty valuable service here. So with digital currency, it's not going to take 3 months, 4 months, thousands of dollars of expense and travel, the worry of having to go on a dark, lonely road in the middle of India to help kids. You'll be able to use your smartphone. And if I had like a little QR code that used, the square codes with all like the little squares, you could, from the comfort and safety of your own smartphone, you could take a picture of that image and send them digital currency, and they would get it in about 12 seconds for virtually no cost, directly on the phone of this bishop. And if you want, they can convert the Bitcoin to Indian rupees or any other currency of his choice, because there are already virtual middlemen exchanges that will be able to transact and do a currency exchange transaction in real time. So that's the power of digital currency. That's the power of a public and private blockchain, to be able to send money instantaneously to people that really need it. Or micro-lending. Okay, maybe $300 is not a lot in the United States, but it goes a long way in Kenya. And as a matter of fact, I'm not saying this to pat myself on the back, but I've got a few of these at home. And rather than me receiving the reward, I was able to convince a woman in Africa that helps African women support babies and families, help women that husbands have left them to support and run their family. All I did was change my address from mine to hers. And I was able to send her my reward system for about 3 days. It didn't amount to much in US dollars, but it goes a heck of a long way in Kenya, and it means a lot to those women in Africa. So think of Bitcoin and blockchain, not necessarily how we can monetize it ourselves, although that's a great and worthy cause. There are much more noble nobler and dignified things that we can use this with. And the people that we frown upon, the people that we don't even know exist, right? The Mother Teresa's untouchables, the lowest of the low. The woman in Afghanistan or Pakistan who wants to sell her hair or make beads or scarves to be able to receive money without the oppression of her husband or father or brothers. That elevates the dignity of women, because now she's an economic force that needs to be reckoned with. She's probably making more money than her 3 brothers or her 2 brothers, probably even more than her husband. Now, the guy's not going to like that. But, I see this as an incredibly liberating, pro-mankind technology that is going to influence the next generation in ways we cannot even possibly imagine. Any more questions? Yes, sir.
Yeah, if you're trading a Bitcoin for some service and it's $15,000, how do you fractionalize that? How does that work?
Bitcoin, so our smallest denomination in the US currency is the penny, 0.01. Bitcoin goes 9 places to the right of the decimal point. You can send theoretically 1/100 millionth of a Bitcoin. And someday the transaction fees will be able to allow micropayments. Like you go to websites where you want to make a donation to American Cancer Society, Susan B. Komen, whatever. Usually the smallest transaction is $25 or $50. Well, why? Because there's bank processing fees. There's a 4% this fee. There's a 2% that fee. Maybe PayPal charges 4%, but that doesn't even count the bid-ask spread of the currency on the other side. Right? There's an exchange rate. So Western Union, you go to an ATM, I want $20. Why does my receipt say 23? Well, there's a 10% fee on top of that or more. So no matter how small the transaction, no matter how large the transaction, it will be done in a digital currency of some fashion for virtually no cost whatsoever. So that's how they're going to be able to scale this. It's programmable. Whatever suits your need, whatever suits your organization, you can find someone to program that currency for you. Yes, David?
I have a question in regards to transactions. Bitcoin, to be able to get the transactions playing when
Yes.
all occur. If it's a small transaction, does Bitcoin require accumulating a number of small transactions to a certain level and then it's mined?
Well, part of the problem right now, so the question is, if there's a small transaction in Bitcoin, do they kind of queue them up and then I think the answer is, at this point in the game, again, Bitcoin is not the most perfect way to send value. The smaller the transactions and the smaller the fee. There are some platforms that allow you to set high, medium, and low priority. High priority, you pay the absolute highest fee for, and it could be $50 on a $50 transaction. Medium or low, but you'll get your answer in like 6 minutes. If you set low priority, it could take up to 2 or 3 days. So yes, David, sometimes very small, unprofitable transactions will sit in something called a mem pool, a memory pool, until the miners kind of decide that, well, things are lighting up, the traffic's not so busy, we'll take and receive those. So they're monetized by, in some cases, the transaction fee that they'll receive. Again, I'm not still sure who receives that, but that's being worked on right now as we speak.
So can I follow up real quick?
Yes.
Can you tell me that the miners will determine which transactions are going to mine?
Right. Listen, I wish I had every single answer for you about Bitcoin and how the economy works, and even though I'm a part of it, I cannot say with utmost certainty exactly who gets the transaction fee. Just like I can't know exactly what the annual expense ratio of a mutual fund. It's somewhere between 50 basis points and 250, but you don't know really exactly. And again, this is a question that was asked of me a few weeks ago. I haven't had the time to look into it, but I'm going to get to the bottom of it. Yes, it stays in the network, but I'm still not exactly sure if it's the mining pool that gets it. Is it the miners? Is it embedded in the fee? And I'm still not 100%. But someone's getting it. I'm just not exactly sure who yet. Yes, sir.
So I can easily wrap my head around this virtual currency and some of the companies that accept it, Microsoft. So let's say Microsoft sells $1 million worth of product and gets paid as Bitcoin. But then the value, so I'm sure there's some kind of conversion.
Yes.
Bitcoins to sales price. But then there's so much volatility in the value of that.
Yes. I'll answer that question. So the question is, if Microsoft or other companies accept Bitcoin, there's so much volatility in the currency, how do they attenuate that? How do they protect themselves against that? So there are basically online currency exchanges where you send it. I believe the company is Shapeshift. Shapeshift will I'm not 100% sure on that, but you can send Bitcoin. It converts it into another currency, and you'll receive it in US dollars or the currency of your choice. That's a work in progress. But at the same time, remember that when you walk down LaSalle Street at these international currency exchanges, where you get to exchange your US dollars for money before you go overseas, there's at least a 10 or 15% spread width between the bid and ask. So I wouldn't worry too much about Bitcoin transaction. If I get a transaction and I'm notified, theoretically I could sell it in a few minutes, and it's probably going to be less expensive than a Western Union fee or a bank fee. But you're right, the more adoption that happens, the less volatility we'll see. Bitcoin has an implied volatility of around 45%. Now that the Chicago Mercantile and the Chicago Board of Options Exchange have come out with futures contracts, and more ETFs, exchange-traded funds, will come out, we'll see that volatility shrink and shrink and shrink and shrink. And again, it'll make it a less volatile method of communicating value. Yes, sir.
You mentioned a couple times that Bitcoin is not the best.
Yes.
What are the key, and there's software engineers and lots of people working on making things better.
Yes.
What are the key problems that need to be solved that will determine who wins and becomes the dominant player in cryptocurrency?
Well, I think that's a great question. I think every transaction that you do has certain attributes that are needed. So the Ripple network for banks, it was a way of keeping track of these IOUs between international settlements. They're going to use the Ripple network to do that. So for them, it's speed and low cost, and it's a private blockchain. So they're probably going to want the infrastructure to be bulletproof in terms of their security, a good ledger, immutable ledger, and they'll probably charge for that network. They'll be charging the member banks for that. But what about like a musician? If a musician wants to sell his music on the internet using blockchain, it might be a completely different algorithm. It might be that we give away the cryptocurrency actually trades for free. There's no fees whatsoever. It's all free. And there's no miners like us. It's just this sharing of a cryptocurrency. But maybe the artists themselves pay to maintain the network out of my price. Like when I go to an Apple iTunes, and I buy a song for 99 cents, well, Apple gets about 92.5 cents of that, and the artist gets just a few pennies. Maybe it'll be similar to that, where I'm actually buying Bruce Springsteen music on a blockchain app, and he gets most of the money. Or maybe it's free to listen, and then he pays the fee. So it all depends on the company, on the application. You can do whatever you want. So I can't really say there's a perfect set of attributes that are going to make the cryptocurrency of the future. It may not even exist right now. Yes, sir.
What are some of your favorite tokens or currencies?
This is not investment advice. Future return, past performance is no indication of future returns. Okay, so part of me says that Bitcoin, it's really great, it's interesting. I definitely think it's overdone, and in its current state is not the most viable transmission of assets. I like Ethereum Classic. I like Zcash. Ethereum is like this. Okay. So what Bitcoin is the cash. David, how are we doing on time? Are we?
We're right there.
Okay.
You want to just answer the question more?
Okay. So the cryptocurrencies that I like. So Ethereum and Ethereum Classic to me is this. Just as Bitcoin was a digital response to cash, Ethereum to me is like for anybody. Does anybody here ever develop like with Visual Studio, or write programs in Visual Basic? No developers here? Okay, or maybe one. So before, you would download Microsoft's Visual Studio, you would write a program in Visual C or C++, you would compile it on your computer, upload it to a server, and then people could execute it from a centralized platform somewhere. With Ethereum, you compile your program on the blockchain. So it writes exactly as it's written, whether it's in Africa, Sweden, UK, Antarctica. It's a way of distributing and not having a piece of software or a program located on one centralized server. So I think that's a really interesting concept. So I think many things will be moving to the Ethereum token. But as I said before, we've all lived through the internet .com bubble and burst. When the .com bubble burst and all these, the NASDAQ was down 70% or 60% from its all-time high, and Google comes out with an IPO, you're like, oh my gosh, who needs another search engine? I'm not buying this piece of junk. But yet Google had a platform and a way of monetizing it that no one really understood at the time because of the times that we were in. I suspect when the bubble burst in cryptocurrency, out of the ashes will arise a phoenix of the most amazing cryptocurrency that will change mankind, but nobody's going to want it because they've got no more money left. They blew it all on Bitcoin and Ethereum and other cryptocurrencies. So if it was me, stay on top of your cryptocurrencies. Only invest in the ones that philosophically match with what you believe in. I know Skip is not going to buy Trump coin, but maybe the next presidential candidate will have one. I mean, I'm not lying. I mean, why can't presidential candidates accept digital currency? Why does it have to go to this big, vast, opaque foundation? Yes, sir.
So I wanted to reestablish a little bit of trust with Bitcoin. So obviously he's talking about how fees are what create how many transactions or what transactions are chosen to go into the block. I'm a miner myself. I don't do Bitcoin, but I do Ethereum and all the other ones. I just haven't been able to purchase an miner. The thing is that Bitcoin, the Bitcoin foundation that is behind the software that runs on the miners and such, they're developing alongside another company that's called Lightning.
Yes.
They're developing a protocol that sits on top of Bitcoin that will allow to create payment channels between you and another person or you and another entity, and allow for the instant transfer of your Bitcoin without needing to broadcast that to the network. And so therefore you wouldn't have to wait for your transaction to be confirmed by the blockchain, by miners, because the software design where it knows both you and the other person on the other end both have that Bitcoin. And so when it comes down to, like, let's say, an option trade, and you settle up, once you close that small network between you and the other person, that's when it will be broadcast.
Like a bar tab.
Yeah.
Right.
But this would allow for Bitcoin fees to drop significantly.
Yes.
And no longer would require, let's say, 0.01 Bitcoin in times like right now where there's high volatility and everybody's trying to enter or exit. So this won't last forever.
It won't last forever.
And like you said, it's going to take time for all this to come out and expand with scalability. But that's a problem that we're all trying to solve right now as it's happening.
Thank you for that.
Aren't there already other cryptocurrencies that work that way?
Yeah, but the thing is, obviously, everybody knows about Bitcoin, and it's already put all their money into it. And so once this Lightning Network comes out, and it's not out yet, but when it does, it'll basically squash all the other currencies that are trying to do what Bitcoin can. Because it'll provide that low transaction fee that all the other currencies are trying to provide. Now, that doesn't mean that Bitcoin will be the only way of transferring money, just like how every country has their own type of currency. Same thing applies to this. Bitcoin may be the store of value, but other currencies could be another way of transfer.
Sure.
In a certain.
All right, so why don't we carry on the conversation, on the side channel off to the side. I want to be respectful of David's time and his schedule.
I'm fine. Obviously, everybody wanted to say, otherwise they can get up. Just a quick piece of information. The co-grant has been moved upstairs.
Yes. And could I just ask one big favor for you guys? I know you all have evaluation forms, and David will send those to me, but please do me a favor. Tell me how I can do better at the next presentation and the ones that follow on the very bottom section. I know I don't have handouts. That's an issue for some people. But I'd like to know in terms of the presentation, what did I cover that, maybe what didn't I cover that I should have? And in general, how can I do better as a presenter? And I would appreciate your time on that. And thank you very much.